Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today, on October 7th, 2025, we are taking a close look at the Australian dollar versus the US dollar, or AUDUSD. The pair is currently in a fascinating state of limbo, and we're going to unpack both the news and the charts to see what's really going on. First, let's talk about the fundamental picture, which is dominated by events in the United States. The ongoing U.S. government shutdown is a major factor, creating uncertainty and delaying key economic reports like the non-farm payrolls data. This has ironically led to some U.S. dollar strength due to safe haven flows, as traders flock to the greenback amidst global political uncertainty. However, the market is also pricing in a very high probability of Federal Reserve rate cuts in both October and December, which could ultimately weigh on the dollar. On the Australian side, the Reserve Bank of Australia has maintained a cautious, data-dependent stance, holding rates steady. Recent domestic data has been disappointing, with a sharp fall in consumer confidence and a decline in job advertisements, putting some pressure on the Aussie. The combination of these factors has trapped AUDUSD in a well-defined consolidation range, with news outlets consistently highlighting this sideways price action. Now, let's turn to the charts to see how this narrative is playing out. Looking at the daily chart, the bigger picture becomes immediately clear. After a strong rally that peaked in late September near the 0.6940 level, we saw a dramatic reversal. Specifically, on October 4th, this massive bearish candle shows sellers took complete control, driving the price down over 2.8% in a single day. This was a significant rejection of higher prices and established a new bearish tone for the market. Since that sharp drop, the price has been consolidating, trying to find its footing. This sideways movement represents a battle between the residual bearish momentum from that drop and buyers stepping in at lower levels. The key resistance to watch on this time frame is the top of this consolidation range, right around 0.6630, which was a previous swing high. If we break above that, the next major target would be the peak from September 17th, near 0.6707. On the downside, the immediate support is the bottom of the current range, which sits around 0.6575. A break below this level would open the door to the next significant support zone around 0.6520. And below that, the major low from late August around 0.6414 comes into play. So the daily chart tells a story of a sharp bearish move followed by a period of indecision. To get a better feel for this consolidation, let's switch to the 1-hour chart and zoom in on the price action since the end of September. Here, the range that everyone is talking about becomes crystal clear. We can see price oscillating neatly between the support around 0.6575 and the resistance near 0.6630. Notice how price has repeatedly tested the upper boundary and been rejected, and similarly found buying interest at the lower boundary. This is classic range-bound behavior, indicating a temporary equilibrium in the market. Traders are essentially waiting for a new piece of information or a significant catalyst to force a breakout in either direction. The lack of follow-through on any move, up or down, shows that neither bulls nor bears have a decisive advantage right now. This perfectly reflects the conflicting fundamental drivers we discussed earlier, with the strong USD being counteracted by dovish Fed expectations. Now, let's drill down even further to the 15-minute chart to analyze the most recent intraday action from yesterday, October 6th. Throughout the day, we saw price remain contained within the larger hourly range. There were small rallies and dips, but no move sustained any real momentum. Price attempted to push higher early in the day, but stalled out before even reaching the top of the range. Later, it drifted back down towards the 0.6615 level, showing a slight intraday bearish pressure. This micro-level price action confirms the broader theme of consolidation and trader hesitation. The volume during these moves was not particularly high, suggesting a lack of strong conviction from either side. This short-term view is useful for seeing that the range is still very much in control, and any trade should respect these boundaries until a clear break occurs. So, let's go back to the daily chart to put it all together and discuss potential strategies. What does this all mean for someone looking to trade AUDUSD? Right now, the market is presenting two primary scenarios, a range-bound strategy or a breakout strategy. For range traders, the game plan has been to sell near the resistance of 0.6630 and buy near the support of 0.6575, with stops placed just outside these levels. However, the longer a range persists, the more powerful the eventual breakout can be, so this strategy carries increasing risk. Now, let's consider the breakout scenarios. A bearish case would be confirmed by a decisive daily close below the 0.6575 support level. Given the huge bearish candle on October 4th, a downside break is a very real possibility. The first target for bears would be 0.6520, followed by a potential move toward the 0.6414 lows. This scenario would be reinforced by hawkish Fed comments or continued weakness in Australian economic data. Conversely, the bullish case requires a strong break and close above the 0.6630 resistance. A resolution to the U.S. government shutdown, leading to a risk on market sentiment, could be the catalyst for such a move. Weak U.S. data, once it's eventually released, would also support a bullish breakout. If the bulls take control, their first major target would be the 0.6707 high from mid-September. The psychological 0.7000 level would be a much longer-term objective after that. To recap, let's outline the most important points and price levels to watch. The market is in a clear consolidation phase, primarily defined by support at 0.6575 and resistance at 0.6630. Below that support, key levels are 0.6520 and the major low at 0.6414. Above that resistance, the next significant hurdles are 0.6707 and the 2024 high near 0.6942. So, what's my unbiased prediction? In the immediate short term, I believe there is a 70% chance that the pair remains within this 0.6575 to 0.6630 range for the next day or two, simply due to the lack of major scheduled catalysts. Looking at the next week, the probability of a breakout increases significantly. I'd place a roughly 55% chance on a bearish break below 0.6575, primarily because the dominant move prior to this consolidation was so strongly to the downside. This would be reinforced if Fed Chair Powell sounds unexpectedly hawkish later this week. There is a 45% chance of a bullish break, which would be reinforced by a sudden resolution to the U.S. shutdown or surprisingly dovish comments from the Fed. The key events to watch for are Fed Chair Powell's speech on Thursday and RBA Governor Bullock's appearance on Friday. These events have the potential to provide the spark needed to break the current deadlock. Thank you for joining me on Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe to the channel, and let me know your thoughts on AUDUSD in the comments below. Please remember, this video is for informational purposes only and should not be considered financial advice. Always conduct your own thorough research and risk assessment before making any investment decisions.